makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Investors look ahead to a key reading on U.S. inflation, which will help plot the path forward for interest rates. We'll bring you regional German CPI numbers in just a moment. Bitcoin also soars as demand from new exchange-traded funds puts the crypto coin's record high in sight. Plus, earnings in focus, shares in Air France KLM slump after it reports a fourth quarter loss as geopolitical conflicts demand. Well, it's a different story at Moncler, the Italian luxury company continuing to show momentum. It beats estimates. We'll speak to the chief executive later this hour. Now, let's take a look at the European markets map. Now, of course, a lot of the focus is on this preferred gauge of inflation or preferred metric data that the Fed will look at, and this is U.S. core personal consumption expenditure gauge. That's due out later today, but we already see a split, and we've been hearing from a lot of Fed speakers over the last couple of days, some saying like, you know, look, the first cut could be towards the end of the year, and then we have Raphael Bostic saying actually the first cut could come as soon as the summer. I suspect, and this is why a lot of traders are trying to position themselves after this key metric that the Fed looks at, is that the key metric could probably show a bumpy ride ahead for the Fed and how they decide to look at the economy. Now, the other big story is, of course, Bitcoin above $60,000 for the first time since November 2021. This is as ETF demand puts a record high in sight. It's really the old economic principle of supply and demand. Now, demand for the token from the new U.S. exchange-traded funds outstripping the amount of Bitcoin that longtime holders are willing to sell. So you can see Bitcoin rising, I think, to around 63,000, then coming down a touch, currently at about 62,787. Now, the other story we're watching out for is, of course, German regional inflation. Now, we have Baden-Württemberg. Difficult to pronounce, extremely important, though, because that CPI rising 2.7% year on year. Bavaria rising 2.6%. Bavaria, one of, I guess, the metrics that we're looking at the most. And this comes in the context, of course, for example, French inflation showing better than expected figures because it's at the lowest since 2021. Now, it does not mean that inflation stays there, but certainly it means that things could be looking up. So it's very likely, and I think we've seen that pretty clear from central banks, it's very likely that the next rate move is down from major central banks. So we're now joined by Beata Manthey, global equity strategist at Citigroup Global Markets, to help me pronounce some of the German names, Beata, which are impossible to pronounce. I know that's important inflation, but also really trying to understand this Fed dynamic. If you look at, Fed, I mean, just inflation in general, it doesn't feel like it's going to be a linear trajectory.
Absolutely. So, of course, we are seeing the latest data coming a bit surprisingly high. Mm-hmm. That's a risk. That's been always a risk. That's one of the reasons why we've been adamant the ECB wouldn't hike before June. But of course, this is one data point in the several months of data points coming our way, right? So it's too early to start panicking yet.
So, Beata, when you look at markets in general, I know you have a new note out, which I want to spend a bit of time on, but what do you think is being most misunderstood in the markets? I know there are different market dynamics. Is it a good opportunity to buy some equities?
So we've been getting pushback on our bullish view on equities for several months. You could have asked this question at each single point over the past few months, right? And the market still found the reason to continue higher. But where we think there is an opportunity right now, year to date, we started to see it is, of course, the catch-up trade of other markets versus the U.S., right? Mm-hmm. So we are overweight continental Europe over the US, which is neutral, for several reasons. One of them being we are at a cyclical trough in Europe. We've already had hidden EPS recessions in Europe, so we are in an early cycle. And the fact that the economy is starting to pick up from low levels, rates will get cut, that's quite favorable for cyclical markets and sectors to do well.
And I love your recent research, really, the viewpoint, basically looking at Europe's Super 7. And so we always talk about the Magnificent 7 in the US, but you've basically identified a group of companies here that could perform very well.
So what is the interesting dynamic this year is that Europe indeed has started to narrow. Yeah. So European index is going up. It's outperforming the US, actually. But it's coming up with the narrowing, with the number of stocks contributing to the overall returns coming down and down. We find that this is quite unusual for Europe. It's more usual for the US to happen. But we argue that for these Super 7 stocks that we've identified, if the market decides to narrow further, they look very interesting. So we looked for similar characteristics for what Magnificent Seven have and what drove their outperformance last year. We also noticed that this set of stocks, the Super 7 in Europe, have underperformed since the start of last year by still 70% versus Magnificent Seven. They've outperformed almost 10% year to date, but there is a long way to catch up.
So these European Super 7, so you have Novo Nordisk, of course this is all Ozempic, the kind of the big story of last year, ASML, that's chips, LVMH, Richemont, Ferrari, so there's a bit of a luxury theme, and then you have SAP and Schneider. What links them all together?
So what we find is when the markets narrow, they narrow for a reason, and usually they narrow to growth. So you want to have growth characteristics, you want to have a superior margin, so quality stocks. But what is different about this set of stocks, so some would argue or some other names should be in this list, but we've on purpose identified those that have economic moats. So we want them to have competitive advantage within their industry groups.
So can Europe actually outperform other equities in the world because of this narrowing?
So the ideal situation for European market to outperform is the market broadening, what we've seen in the fourth quarter of last year, right? Definitely. And what we find that actually at the beginning of new cycle, in the early cycle, markets tend to broaden. So what is happening right now is quite unusual for Europe. But because these stocks have such attractive characteristics and they have lagged the Mag 7 last year, and really international investors are starting to wake up to the idea that Europe has very good companies, very robust business models. They underperformed. This set of stocks is still cheaper than the Magnificent Seven. So I think if the market decides to narrow further in the short term, they are a big competition in terms of outperformance for the Mag 7 going forward.
So, Beata, if you say this is very unusual, but it's happening here in Europe, how do you explain it? Because it's a bit of a mess to try and understand where markets in general are going?
So we've done lots of number crunching, and we've looked at historical data till 1990 on a quarterly basis. What is the contribution of top 5 stocks, just for comparative basis, for Europe and for the US? So for Europe, on average, since 1990, top 5 stocks contribute to 25% returns. In Europe, year to date, we have almost 50. In the US, this 25 for Europe becomes 45. So 45 for the US year to date, it's not unusual. It is unusual for Europe. But we really argue that this is subdued market expectations, subdued market pricing view on what EPS could do going forward, and that is triggering this catch-up trade for these attractive European names versus the US.
Beata, and this is not CFA level 5. This is like a meme that I was sent, and it was kind of like looking at the US economy saying it's just being propped up by NVIDIA and Taylor Swift. And there's unfortunately some truth in that. So when you look at NVIDIA, I mean, it's so unusual to have one single stock kind of almost dictating all the market. What does that tell you about what the market is looking for?
It's definitely, so this is the reason for the narrowing, right? So markets narrow either because we are really worried about growth. Growth is scarce, or we find a new compelling theme that investors really can't not be part of, right?
So this is the name of the game. Beata, as always, thank you so much. Such a great piece of research. So interesting. Beata Manthey, they're a global equity strategist at Citigroup Global Markets. Now, coming up, our exclusive interview with the Irish Enterprise Trade and Employment Minister, Simon Coveney, will be live from the WTO conference in Abu Dhabi next. And this is Bloomberg.
On March 6th, Chancellor of the Exchequer Jeremy Hunt delivers the UK's next budget, with his Conservative Party lagging in the polls ahead of the next general election. Bloomberg Television brings you up-to-the-minute special coverage, Wednesday on Bloomberg.
Now, the World Trade Organization is holding its 13th ministerial conference in Abu Dhabi this week. The most important item on the agenda is reforming the WTO's dispute settlement system, but few are expecting a breakthrough. Well, Bloomberg's Vonnie Quinn is there for us with a guest. Hi, Vonnie.
Hi, Francine. Thank you so much. Let's get straight to Minister Coveney. Minister, we're supposed to be on the final day of negotiations here at the WTO. Are we in the final day? Will we get a chair's text tonight?
Honestly, probably not. There's a lot of pessimism around here, but sometimes that happens before agreement. You know, when you have difficult discussions, which undoubtedly are taking place now. But I think in all likelihood this will probably extend into tomorrow. And on some of the contentious and difficult files, let's wait and see if it's possible to get compromises. But as I say, this has been a difficult week of negotiation. You know, we're in a fantastic space here physically in terms of infrastructure for a conference like this here in Abu Dhabi, but the texts that we're trying to agree in terms of the role of WTO in international trade is a very difficult thing to get progress on this week, if I'm honest.
So there's policies and there's procedure. We'll get to the procedures in a moment, such as the dispute resolution mechanism. On policies, is there going to be an e-commerce tariff moratorium extension? Will India agree to it? They haven't so far.
Well, I certainly hope so. You know, the vast majority of countries, I mean, all but about 4 or 5 countries want to see an extension of what's called the e-commerce moratorium. And just for your listeners, what that means is that everybody agrees not to impose tariffs or taxes on e-commerce across borders. So in other words, we can sell digital products and services without there being barriers to trade.
It gets extended at the last minute by India, but it extracts concessions for that.
Yeah, so India, but not only India, are saying that they're not happy that the e-commerce moratorium would be extended further. They would like other issues agreed around that. Most other countries are saying, look, we need to agree a work plan in relation to e-commerce for the future to make sure that we deal with things like a digital divide between developed and less developed countries. And we're very much up for that agreement in terms of agreeing a work plan going forward. But in the meantime, we've got to extend a moratorium on any barriers to e-commerce trade. And for a country like Ireland or a country like the US, where there's so much commerce now that is digital in form, it's really important that we don't put barriers to international trade on e-commerce.
Have you done the math? What would it mean for GDP in Ireland?
Well, look, I mean, I think in reality, if you have a small number of countries this week trying to block an extension of the e-commerce moratorium, I think the other countries on a plurilateral basis will probably go ahead and do it anyway. So what you'll have no more than half a dozen countries deciding, well, they're not going to apply an e-commerce moratorium, but you'll have the rest of the world doing it. So we would much rather have that as a common agreement across all WTO member states rather than having, 2 or 3 or 4 countries moving in a different direction, because that undermines the credibility of the WTO system. But look, my sense on this is that we may well find a way of getting agreement on extending the e-commerce moratorium, subject to an agreed work programme on how to deal with e-commerce between now and the next ministerial meeting in 2 years' time. The other concern, of course, is that some countries are using the e-commerce moratorium as a way of creating leverage to get agreement and compromise on other files.
Such as public stockholding, for example, grain, rice. India maintains that it needs to have those subsidies in order to feed its poor. What's wrong with that position?
So I think everybody here accepts that there are food security issues in many parts of the world. Countries need to be able to hold a certain amount of stock to make sure that if there is a shock to the system, like we saw, for example, linked to the war in Ukraine and Russian aggression, that had a severe impact on the price of grain, and it had a knock-on consequence in terms of food security. So countries want to be able to hold a certain amount of stock, particularly in the developing world, to make sure that they can feed their own population in time of crisis. But we need to make sure that what that doesn't lead to is the effective dumping of large amounts of that stock on international markets in a way that would undermine the price of those commodities in the future, because that undermines global trade. So this is about getting the balance right between legitimate food security concerns and at the same time trying to protect a level playing field that determines prices on the basis of demand and supply, rather than dumping large volumes of stock onto international markets that could be very disruptive.
On a slightly different note, many delegations have been using this time here in this region to visit places like Saudi Arabia and the GCC countries, as have you.
Yep.
Is there a deal in the near future? Could a deal help solve some of Ireland's infrastructure problems, for example, housing and so on?
Yes, so I've been travelling around the region. You know, I've been in Saudi Arabia, I've been in Kuwait, we've been to Dubai, and obviously spent a lot of time here in Abu Dhabi as well. And look, what's happening in this part of the world in terms of ambition, investment, growth is really quite extraordinary. And that's why we have 16,000 Irish people now working and living across this region, engineers, accountants, architects, construction firms, teachers. But we'd like that relationship to be a two-way relationship. And what's happening in Ireland is also very exciting right now in terms of economic development and infrastructure development. And the two big drivers of that are decarbonisation and digitalisation. So we are planning, for example...
Is there an announcement in the near future?
Well, no, but I do think we will see investment funds in this part of the world investing more in Ireland and in Europe through Ireland in the future, because they see Ireland as a safe space to invest. With very pro-enterprise policies. And that's a message that I hope is well heard this week.
Minister Coveney, thank you so much for your time. Francine, I'll hand it back to you from the WTO.
Thank you so much. Arvani Quinn there with Ireland's Minister for Enterprise, Trade and Employment. Now, we'll also be speaking to the U.S. Trade Chief, Catherine Tai, a little bit later today from that same conference, WTO conference in Abu Dhabi. Now, you're also looking at live pictures of the Russian President, Vladimir Putin, who's giving his annual State of the Nation address. It comes just 2 weeks before the Russian presidential election. Now, it's also ahead of Alexei Navalny's funeral on Friday in Moscow. The Russian opposition leader died in a Siberian prison earlier this month, with his family and world leaders blaming the Kremlin. Coming up next week brings one of the most important UK budgets in recent history. So to prepare, Bloomberg is putting you in charge of the nation's finances with the Play the Budget game on the website. It's really really good. I've played it about 5 times to make sure I didn't get a terrible economy at the end of it. We'll be giving it a go live with its creator next. This is Bloomberg. Now, with the muted reopening of the Chinese economy and a slowing demand in Europe and the US, luxury stocks haven't had the easiest rise this year. But some have been doing better than expected, and Moncler's results came in ahead of estimates, prompting some analysts to lift price targets for the Italian luxury company. Bloomberg Intelligence also says the company is well positioned to weather a difficult economy. Now, after a year of industry-beating growth, the brand also unveiled the Winter 2024 Grenoble collection, a range closest to the technical mountaineering roots of the company, where I'm delighted to be joined by Remo Ruffini, the chairman and chief executive officer of Moncler. Remo, as always, thank you so much for speaking to Bloomberg. Now, you've had a pretty good couple of quarters. You came out with earnings. Again, they beat analyst estimates. Are you expecting a pickup in the U.S.? Have we seen the worst of U.S. consumer demand?
Basically, US was quite difficult last year. Was not an easy moment, and now is better. But again, last year was a very good year for us, very volatile. We expect 2024, volatile as well. I hope not, but the first 2 months are very good. But our concern is really to watch carefully the war, watch carefully the customer, because learning from last year that was super volatile, we are ready to be careful of this current year.
Mr. Ruffini, are you expecting or are you seeing any signs of a recovery in China?
China is again very good. We have the last quarter of last year as China's quite successful. Chinese New Year was as well very, very strong, and now is slow little bit, but because it's finished the vacation, it's like Christmas in Europe, but still China strong, and for us is very, very interesting market. Or the Chinese is strong, they are strong in China as well, traveling all around, in Korea, in Japan, and we have in Europe as well. They almost recover, from 2019. A lot of travelers, Chinese travelers, are in Europe, and Hong Kong is back. Hong Kong, the biggest news is Hong Kong is back. As you know, was in crisis since 2017, 18, and now the customer are back. The Chinese, they continue to travel to Hong Kong, and honestly, the Asia is quite solid market for us.
So, Remo, what concerns you the most, and what are you most positive about? I know there's, again, you talk about volatility, there are wars, consumer demand, I guess, is getting more picky. Do you focus on pricing or your supply chain? What's the biggest worry?
For sure, the inflation that we have in the last couple of years was impacting the price. We not increased the price. We only put the increasing cost of the raw material and the manufacture. Having said that, what worries more is really the change on behavior of the customer. They really change the trend. They're really super fast to change. Everybody today talking about this, let's say, white luxury is a very popular word, and only 1 year ago the market was very, very maximalistic, very, very streetwear. Now it's very quiet, very, very quality, very, 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 very sophisticated, and you have to stay tuned with the customer. You have to stay tuned with the community. You have to stay tuned with everyone around the world, because the trend could change from day to night. It means it's quite tricky.
Remo, you also did a pretty impressive Grenoble show, and there was a lot of people saying, look, you may be going back to some of your roots. We're looking at beautiful pictures of people skiing. Are you going to, what's the right way to do luxury right now? A lot of people are saying there are too many luxury companies out there. How do you differentiate yourself?
Actually, we are quite unique. Uniqueness for me is everything. If we just changed our strategy 1 year ago, is based on one brand, Moncler, and 3 dimensions: Moncler Collection, Genius, and Moncler Grenoble. I think we demonstrated in the last 18 months with the 3 events, one in Milano in Piazza del Duomo, one in London with Genius, and the last show we did in St. Moritz a couple of weeks, 3 weeks ago. I think our dimension is there, our strategy is there. I'm very confident that we have a clear idea for the next 3 years, because we really give to the customer a Moncler approach. We try to be, as I always say, beyond fashion, but at the same time we stay tuned with this world, but not losing our roots. If you watch the last show we did, is really in the luxury world, but in the middle of the forest, is really a fire tale. I think it's something super interesting. I'm quite confident that our strategy is very solid. We can work very well in the next 3 years.
Remo, it's also been a few years since you acquired Stone Island. I remember talking to you about it on this very program. Given some of the pressures that some of the smaller luxury companies have, are you ready or looking for another acquisition?
So basically, Stone Island is in their good moment, because we need couple of years to redesign the organization, redesign the distribution, redesign the strategy, because as you know, we love to go DTC, direct to customer. Direct to customer approach is really very important for the strategy we normally use at Moncler. After the 2 years, we're really ready now to start talking with the customer in the right way, to have the right distribution, the right stores. And for the next acquisition is not today, or not tomorrow, because honestly, as I said before, we have a lot of things to do for Moncler. We just start our new strategy, and we just started to redesign Stone Island in terms of marketing, in terms of communication, in terms of everything. And I think we have a couple of years, 2-3 years for both brands, very, very intensive. And I trust a lot we are in the right track. Honestly, another brand could be tricky for us.
Remo, when you look at some of, I guess, the opportunities out there, do you sell differently to your customers now in 2024 than you did 5-6 years ago? Is the world of luxury really changing? And what does that mean for Moncler for you to stay on top?
It's changed a lot, Think only about omnichannel. Omnichannel is everything. If you want to stay tuned with all the customer, you need different touch point and to not to sell, but just to to improve your brand perception. 5 years ago was totally different. Now we have honest to improve a lot this journey, because I think especially now that wholesale is not successful as a couple of years ago, digital is okay. I think we have really to build up a strong touch point with the same concept, the same image, the same approach, the same experience, and give the possibility to our community to go around all our touch point and find the same Moncler with the same spirit, with the same charming, let's say.
Remo, thank you so much for joining us today. Remo Ruffini there, the Chairman and Chief Executive Officer of Moncler. Now, we'll have plenty more, of course, on luxury throughout the day. Also, a piece of news on Siemens Energy and its wind turbine unit, Gamesa, which posted losses of more than 4 billion euros for 2023 due to faulty turbines and unprofitable contacts. Now, Siemens Energy has obtained a $4 billion sustainability-linked revolving credit facility to replace its existing credit line, and that subsidiary of Siemens, you can see, up 2.6% is what the share price is doing.